You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology, and we talk about it here. Hopefully bringing a lot of voices to the table that have great insights to share with you here every week on the Big Cast. And I think we've definitely accomplished that this week. Marqeta's head of market intelligence, Rachel Huber, is going to be joining us to dig a little bit deeper into their recently released 2023 State of Payments report, which has some really interesting findings in it that we'll be getting to in just a bit. I'll remind you can always find out more about the Best Innovation Group via our website, big-fintech.com. I have just returned from a fairly extensive stretch of vacation. The first half of that was spent in Europe, more specifically the UK and Amsterdam. And happy to be back just in time to be here for the Digital Town Hall, which the July edition will be coming up on Wednesday afternoon, July 26th. You can join us at 3 p.m. Eastern Time, noon Pacific. Always a great opportunity to catch up with some of the best practices, to hear how leaders in the industry are dealing with some of the top drawer challenges facing credit unions these days. A live and lively interactive discussion co-hosted by our grand poobah, John Best of Best Innovation Group, as well as Mike Lawson of CU Broadcast. I believe it's going to be pretty much an open forum this time around, which is always, those are always good ones. I love them all, but as opposed to having a specific guest and a topic to talk about, this one just throws the floor open. I've been doing a lot of conversation about ChatGPT recently. I don't know if we'll be going in that direction, but check out the website cutownhall.com. There's no fee to join. It's fully free and all are welcome, but you do need to drop us a note in advance so you can register and we can send you a link for that. So hope to see you there. While we're talking about ChatGPT, I'll also mention the crowdsourced initiative the Best Innovation Group has launched recently, where we are looking to try to gather the best information of how credit unions are putting generative AI, often thought of most commonly in the ChatGPT space, how they're putting it to the test and to use in their operations, whether in the back office or customer facing. We'll post a link to that website where you can hopefully, if you're willing to participate, the idea is to share this information freely across the credit union community. So if anything you're willing to share, we can do it anonymously without mentioning your credit union. We'd like to know the size so we can get a good stratification of how things are being done. But other than that, all the information that's aggregated will be shared freely across those who participate and probably even some of those who don't. So check our website and check the show notes just below this episode, and you'll find the details of how to get out there. One of the things I like to do every time I go out of town is to kind of test out the, kind of secret shopping, whatever you want to call it, the way people are approaching their payments processes locally. I keep hearing, particularly in Europe, cash is dead. There's no cash. Everybody's digital. And it seems like most of the conversation, even though cash has declined in the U.S. recently, it's always that we're behind, that everything's electronic every place else. And whenever I hit the ground, I find that isn't nearly as true as people seem to claim it is. I spent a few days in Amsterdam, and in the UK, we were with the exception of about a half a day, we were outside of London. And it may be true in the big cities. I mean, especially now that you can use public transit just by waving your phone or your credit card without buying individual tickets. But I'm still finding when you go into the smaller towns, people still like cash. And talking to some locals, even in a college town, which is not that far out, they even said, oh yeah, once you get outside the big cities, cash is still king. So, and I think that's an overstatement too. I mean, I think that there are obviously opportunities to use cash outside the big city, but it's always interesting to kind of remind ourselves that we have a very different perspective as payments experts of how we look at this stuff. And one of the things that brought to mind as well is a reminder that something as common as Venmo here can't be used overseas. I was there with some locals and I was hoping to kind of trade some money with them, and for some kind of splitting of bills is one of the common things people talk about using it for here. And I said, why don't I just send it to you by Venmo? What's Venmo? You lose perspective pretty quickly. Even Cash App is a little bit more available outside the U.S. And Rachel actually talked about that a bit in our interview coming up too. But It's just another one of those that's out there. And with P2P in mind, an interesting piece that was just posted for my friends at the Atlanta Fed, Claire Green, one of the payments experts there, was talking about P2P and the consumer understanding of their protections and insurance around that. And talking about the Consumer Financial Protection Bureau recently put out some warnings about the fact that it's not really clear cut. I would go as far as to say that those deposits are not insured. She makes the point, I think very rightly so, that the problem is it's a very mixed bag and it's very difficult to know what kind of protections you have. And there's more people apparently that are keeping money kind of at the tune of, according to Claire's research, or at least what her findings would say, I don't think it's literally research, about $300 on average in those accounts. Not a lot in the grand scheme of things, but given how important deposit insurance has been, based on some of the conversations over the course of the last year, that's an interesting piece that I think we always forget that people who are outside the space don't necessarily fully appreciate and understand. The also mentioned that that's not unique to the United States. The Canadians, there was actually some polling done there that showed that Canadians clearly had confusion about whether there were differences in the protection of their money between banks and fintechs. And it made me wonder about something like Zelle, that we all know that is a bank-sponsored P2P application, doesn't actually hold a separate balance. It just runs into your checking account or demand deposit account, if you want to talk in CU vernacular. But I wonder if the average person really fully understands the difference between the two. I'm going to ask my gardener. I pay my gardener by Zelle. I'm kind of curious how she thinks about that. I know she chose that over PayPal or Venmo, so I'll report back to you once I hear about that one. On my flight back from England, I think it was actually my wife that noticed this. On the video system, there was a movie that was available called The Bank of Dave, which I thought, I wonder what that's about. And I clicked through, looked at it, looked like kind of a lighthearted, kind of romantic comedy kind of thing. We've never done a movie review, as far as I know, on the Big Cast before. But that's exactly what we're going to do, because I somehow managed to deal with banking, credit unions, and payments, even on a flight home from the UK on a vacation. It was a fun movie. I really enjoyed it. I kind of thought I'd just kind of dabble in it, and I wound up watching the whole thing. Very, very light fare, but the story is about a gentleman named Dave Fishwick, who is a real-life individual, and they point out that this is a true story, and we'll get back to that in just a second. Dave Fishwick is a successful small businessman in a small town called Burnley. I believe it's about 80,000 people, kind of in the northern part, well north of London. And London plays the villainous role in this one, as it often does, the big city kind of situation. Dave Fishwick's business, he became very successful in running dealerships, selling minivans, minibuses, RVs, and was very active in the local community, and noticed that it was becoming very difficult for individuals to obtain credit. Consumer loans and business loans, for that matter, that the big, as they call them, their high street banks, the London banks, were not investing back into the local communities. And his idea was that he wanted to start a local bank so that the local money would be kept in the community and reinvested in their own community, which has run into some challenges, like a lot of the more northern, outside the metropolitan financial district areas had. Also, this story, as I found out later, they didn't make it really clear in the movie itself. The real situation took place just after the 2008 financial crisis. I guess he really looked into opening this bank in about 2011. And I'm listening to this and I'm thinking, this screams people helping people. This is a credit union story, or if you're in banking, potentially a CDFI story. That was kind of the way I kept thinking about it all the way through. And I kept thinking, why don't you just apply for a credit union charter, which they also do have in the UK. But he went after a banking license. And, according to the story as I see it, this is what I've read in the documentation after the fact, ran into a lot of pushback from regulators. Now, the way the story, as these things usually go, is they have to be embellished to a great extent. The level of villainousness, whatever you want to call it, that the regulators had. I mean, he literally felt like, at one point they all got into a conference room and talked about how they could stop him. And you could almost see like the folks twirling the sides of their snidely whiplash mustaches. It was fairly over the top, like a lot of melodramatic romantic comedies are, but that doesn't make them bad movies. It was still very interesting and fun. It was set in the context of a big city lawyer being sent into town from London to help him out with his problem, as he really wanted to try to push this through. It was a junior guy that was sent by one of the senior partners as a chance to really, bill some hours, and hopefully, get a client, but also maybe just get him off the idea and then move on. And lo and behold, like these things kind of happen, the big city lawyer who comes to town looking very cynical becomes smitten with the locals. He gets kind of pulled into the cause. He meets a young woman in town, the ingenue, and they start to kind of spend some time together. There's a movie back in the 80s that kind of reminded me of this one called Local Hero. And I'll tell you, Local Hero was one of my favorite movies. I wouldn't put this one in the same ballpark, but thematically, it was kind of in that same territory. And like I say, it's worth watching. I give it a solid 3 stars. And you can imagine, as a romantic comedy, I think you can kind of figure out how it probably ended. But I did a little bit more research after the fact, and I found that maybe not more than most movies, because I don't really bother checking that much. But for one that was really, considered or positioned as a true story, just how true was this one? And we'll post some links to some fact checking on it as well. But okay, Dave Fishwick is a totally real person, and he really was a successful RV and minivan dealer, and he really did want to start a bank. Technically, and it was not technically called the Bank of Dave. He did start what turned out to be the Burnley Savings and Loan, and their slogan is Bank on Dave. So he definitely has that local kind of presence and personification there. They have yet to actually raise the capital required by regulators to actually get a full banking license. But they are operating as an independent lending company. Oh, the other thing I didn't mention that's very credit union-like, it's a not-for-profit. The way he set it up, and this actually is factually correct, he set it up that any profits it generated would automatically go to charity. Not technically the exact same definition of a credit union nonprofit, but pretty much the same thing. So a little bit different. Also discovered, going into the details, the whole idea of the lawyer coming in from the big city who plays a central role in the thing is totally invented. Pure plot device to kind of move things forward. So I think we can safely assume that the romance didn't happen as well. The fact that the capital wasn't raised, which was the big kind of, climactic, driving up to the edge of the cliff kind of moment, wound up not really being the case. They still haven't raised the money. They still are hoping to raise the money, but they are actually profitable, from what I understand. Profitable in terms of cash flow positive and generating surplus that they can actually turn over to charity. So from that standpoint, it's working out well. Also discovered, I don't think it's available in the United States yet, which kind of surprised me. It's on Netflix UK. I checked BritBox. I checked Amazon Prime. Don't see it out there. It does look like it might be coming out a little bit later in the year. I'm wondering if they might be tying it to maybe some more visibility for the city of Burnley. That may sound familiar to anybody who follows the Premier League soccer. They've been promoted. They'll be the smallest town in the English Premier League soccer league coming up this season. And J.J. Watt, the former American football player, has bought a minority stake in the team, too. And if you happen to be flying on Virgin Atlantic, you can do like me and expense your vacation ticket by doing credit union research. What? I did not expense my ticket. IRS, if you're listening, that was a total joke. That's not happening. But anyway, Bank of Dave, interesting stuff. We'll post some links to it, so do take a look and see. And like I say, it just feels like a credit union story. Given all the sponsorship we've got going on with sports teams lately, you may want to look into that. If it's coming out in the States, I could see a lot worse places than to actually try to get people educated about credit unions if you want to add a little, promotional announcement wherever it winds up streaming or whatever. Anyway, let's go on to our conversation that we just had with Rachel Huber from Marqeta about their recent report on the state of payments. I'm here with Rachel Huber, who's the head of market intelligence for Marqeta, who recently released their 2023 edition of the State of Payments report, which, of course, hits all the hot buttons for me in terms of the type of stuff I love to dig into. And Rachel graciously agreed to join us to discuss a little bit deeper. Rachel, thanks for taking the time.
Thanks for having me, Glenn.
So this is actually, I think you've got data that shows in the report you tend to compare 2022 to 23, but you've actually been doing this even a bit longer, right?
Yeah, this is actually our fourth annual report of the state of payments. I think 2020, obviously the world was changing pretty significantly, and we wanted to really start tracking the trends that we were seeing. And we thought that that was a really important thing to do. And as the world was shutting down and people were ideally moving more digitally, and it's something that we've kept up over the years and has been a really great barometer of consumer attitudes. And the survey we track US respondents, UK respondents, and Australian respondents. And so it's been a really valuable source of insights for us.
And some of those geographic breakdowns were even a little bit surprising to me as well. And you've got a nice, good size sample size. It's US is 2,000 and 1,000 each in Australia and UK. So it's pretty statistically significant.
Absolutely. Yeah. We conduct our surveys so that they're demographically representative of the respective geography as well. So, these responses are going to be what you would expect for the average consumer of that geography.
Now, I know a lot of what you were kind of probing on in terms of attitudes and behaviors has to do with, I guess, what we could broadly call embedded finance. And you're definitely seeing more comfort, uptake, interest in that area.
Absolutely. And here at Marqeta, how we define embedded finance is essentially any non-financial company whose main line of business is not financial services, offering a financial service of some sort. And so that could be a retailer offering a credit card, as simple as that. But it could also be, offering a checking account from maybe a big tech firm, right? That's not their main line of business, but they're offering it. And so what we see is that when we ask consumers, their level of interest in it, about half of consumers said, yes, I would be interested in getting financial services from them. And that's heavily skewed actually among younger consumers. 18 to 44-year-olds are significantly likely to say they're interested in it. And it kind of tapers off as consumers get older.
But as we all know, that is the group, if they're going to get comfortable now, they're going to build up more assets and become the more valuable customers as time goes on too. So don't let that ship sail away from the harbor too quickly.
Absolutely. Yeah. And that's something we've been talking to our clients a lot about, and just talking in market is, hey, this is the prime time. You don't want to forget about the 18 to 24-year-olds. I think sometimes it's easy to say, well, they're not financially mature yet. Well, they're engaging with many different financial services already, and you need to make products that are going to be relevant to them today and tomorrow.
One thing that really kind of surprised me between the U.S. versus the UK and Australia behavior was you asked about making purchases on the retailer apps, and it looks like the U.S. is actually ahead on that, which actually kind of surprised me. The report attributes that to Americans' love of rewards, and I'm guessing that this is, and again, maybe I'm just kind of a little bit too isolated here in terms of seeing how we market it in the States, but I'm thinking of like Subway and Taco Bell, where the ads just really hammer home, order in the app, you get a free second little premium or free delivery or something like that. Is that what we're talking about?
Yeah, absolutely. And this question was asked to consumers who were already using mobile wallets, which is about 67% of respondents. And so among those respondents, we saw a US survey, or rather US mobile wallet users, saying that they were significantly more likely to have made a purchase with a retailer. And I think you hit it spot on. I think there's a few factors why retailer apps have been taken up at a higher adoption rate than the Australian and UK. And I think one is that the American level of choice is unprecedented. And so I think there's a lot more competition, whether it's for a Taco Bell, Subway, or my local grocery store that wants me to shop there over a large national chain. So I think we've seen a lot more creativity around that. I also think another factor is that the way our card interchange has traditionally been structured is, there's a lot more interchange to be had. And so I think we've also seen retailers try and incentivize spend maybe on alternative channels. So my example of this is always Target's Red Card.
Mm-hmm.
They use their mobile wallet to incentivize Target Red Card purchases, which, I save 5% as a consumer. On the back end, their processing costs are a lot less if you use that rather than using my other cards. And so I think there's a combination of those factors of the consumer choice, as well as just the unique payment structures that we have in the US.
Now, you mentioned that according to the survey, about 2/3 of Americans have used or are using mobile wallets. That's probably worth kind of going back. How is Marquetta defining a mobile wallet from that standpoint?
Yeah, absolutely. It can be, it can be happening at the point of sale. So think a tap and pay, that's going to enable it, whether you have a formal mobile wallet, such as a Google Pay or Apple Pay, but it could just be enabled via your mobile phone. You could also be doing it, remotely, not at the point of sale, but making the purchase through your mobile phone.
And that might be a PayPal. I mean, that might be, like you say, a retailer-based app if you've loaded the
Absolutely.
Starbucks app or something like that.
Yeah.
And that was the other thing when you actually look at the number, and I guess this question was asked specifically of people who use mobile wallets. Again, caught me off guard. The percentage of people who are comfortable at this point leaving their physical wallets at home, which has always been, I think, a real litmus test. And I still thought, I sure don't do it. In terms of just holding on to my driver's license or something like that. But you saw a pretty significant uptick in that just over the course of the last year, right?
Yeah, it was super interesting. So in 2022, we saw only 60%, still a relatively high number of mobile wallet users saying, I'll leave my wallet at home and just rely on my phone for payments. In 2023, that jumped 11 percentage points to 72%. And so that was a pretty significant jump. And I wonder if it's more just ubiquity that we're seeing at the point of sale. I mean, obviously, during COVID, we saw a lot of people go contactless. And we have seen some payment behaviors revert to maybe pre-pandemic behaviors where it's maybe not as common to do everything at, a self-checkout, for example. But this was definitely an interesting one. And I, can't point to any one specific factor. I think it's just a really great sign for continued investment in mobile payments and just, consumers just want different ways to pay.
And again, to put that in context, I think it was up to 72% of mobile wallet users who were comfortable doing that. But and again, that's 2/3 of the population had used a mobile wallet. So we're still talking about overall about half the population, which is
Yes. Yeah,
really,
absolutely.
really surprising to me. I would have, if I were asked to guess, I would have put that in the 20 to 30% range. So,
I probably would have been right there with you at the same time. And I think it's just a really great sign for, especially in the US, which has always gotten a lot of flack, maybe for our outdated modes of payments relative to a UK or Australia. Tap to pay has been a thing there for years and years. EMV has been there for 20 plus years already. And I think it's a great sign that we're seeing these jumps.
the other thing, there was one area where you actually broke out by gender, males versus females, and I thought this was interesting too. That males appear to be more prone to cart abandonment. Starting off some kind of an online purchase and at some point just kind of losing interest or whatever, and then not completing the transaction. And any theories as to why that might be?
So I found this data to be super interesting because on the whole, we actually tend to see that males, younger males especially, adopt new payment methods at a much higher clip than women. So it does on the surface seem almost a bit counterintuitive that having to have a new payment method or to download a new payment app would deter them more than women. But I think when I kind of took a step back, I think maybe it's, it could come down to something as simple as they want the choice of when to adopt rather than being forced to adopt something. I go out, to see a new technology, I want to try it rather than, being forced to do it. And I think that just goes back to overall a disjointed payment checkout method is really going to, result in lost sales, cart abandonment. But that was definitely an interesting breakdown for sure.
Yeah, I can see what you're saying there in terms of kind of the population or the universe that you're looking at. If you're more likely to just kind of dabble in the bleeding edge, then you're more likely to just kind of play around, but not actually, it might be just purely just experimenting for the fun of it.
Yeah, exactly.
The other one, and I think this ties even probably most directly to our, heavily credit union based audience. And again, one that surprised me. And again, I'll just go down to the American side of this too, is that 28% of Americans, only 28% from my view, said that they would be quote unquote very inconvenienced if all physical bank branches closed. Again, that's a much lower number than I expected. It's still a higher number than you saw in the UK and in Australia. I'm kind of curious, what you think about that. To me, that's almost at odds with the fact that we haven't seen more migration to digital banks. I guess there's also a somewhat inconvenienced category in there too that comes into play.
Yeah, absolutely. And in the US, we saw there's an additional 37% who said they would be slightly inconvenienced if all physical banks closed overnight. But again, nearly as many, 36%, said this would have a little impact on me. We have, of course, seen digital banks grow in popularity, but our research does show that traditional banks are overwhelmingly still the primary bank relationship for most Americans. And habits die hard, including going to a physical bank. So I was slightly surprised by it. I think it's something that, if we dig deeper into the numbers, maybe there's a little bit of, well, do as I say, not as I do, almost, because we ask consumers, when's the last time you used a branch? And we looked at a monthly basis. So past 30 days, 52% of consumers said they still went on a monthly basis, which is relatively high. And that did not change across age groups significantly, which was also surprising.
That is surprising. I wouldn't have put that number that high. And so,
Right?
yeah.
Yeah, I was kind of surprised. I was totally expecting to see, 18 to 34-year-olds, it's, 10 percentage points or more difference, but really we didn't see that variation. There's maybe, something like ATM can count as going to the bank branch for consumers. So it could be something as simple as that. But I do think branches hold a very valuable role for consumers. And then something I would posit acts as a safety blanket. If it did close and they had a more complicated transaction, maybe they were going to do a wire transfer for the first time, they're closing on their first house or what may have you, they may be able to do it digitally, like that exists. Or, maybe they could find a non-bank ATM, but that's usually not their first preference when they have the option of a branch. So I think it's maybe consumers realize, yes, if they closed, I would be able to do what I need to do, but I still prefer it at the end of the day, if that makes sense.
Yeah, I think you make a really good point there, that difference between kind of stated, attitudinal preference versus behavior when push comes to shove. Because like you say, it's like, okay, yeah, if I'm asked that question, it wouldn't be a big deal, but then am I going to close my account? And then what happens if I have that complicated transaction? I want to look somebody in the eye. So yeah, there still
Exactly.
is that value. This is a great service, and it's freely available information. I mean, you've got this posted on your website, right?
Yeah, you can go on marqeta.com, and State of Payments 2023 is downloadable for anyone to take advantage of.
Yeah, I'll post a link to the and in our show notes as well. But I love digging into this stuff, and I love the fact that you've got a good solid data sample and some history over time too. It's a well done report, Rachel. I really appreciate you taking the time talking about it. Any other kind of key nuggets you want to mention before we wrap up?
No, I think this has been great. The embedded finance is something that we're seeing a lot of. But again, for your listeners, banks and credit unions have a real role to play, and they will for a long time. And I think it's going to be a great ecosystem that's going to just grow together.
Great. Rachel Huber, the head of market intelligence for Marqeta. Thanks again for taking the time.
Thanks, Glenn.
So I really do like this report a lot. It confirms some fairly commonly held beliefs in many cases. It throws some curveballs in there, like we discussed, things that I definitely did not necessarily believe to be the case myself. And even in terms of the way things are split between the behavior in the US versus the UK and Australia pieces of the sample. But in all cases, they've got some pretty solid, it's a good sample size, and they've got some pretty solid data behind it. So some good food for thought, I think, especially if you're looking to educate your boards or your management teams. I think it's good material to potentially use towards strategic planning, et cetera. Thanks again to Rachel Huber for taking the time to talk about that. And we'll be following along, hopefully running into them on the circuit coming up as we're moving into conference season again. I'm guessing we may be hearing some more about this. I think that pretty much does it for another episode of the Bigcast. Again, my name is Glenn Sarvati. You can track me down via my firm 154 Advisors. You can find us on LinkedIn or on Twitter occasionally at 154 Advisors. You'll find the Best Innovation Group on LinkedIn and Twitter at Big FinTech, or our Grand Poobah John Best at JB FinTech. Check out the website, big-fintech.com. If you go to the media tab, you'll find the show notes where you can find follow-up information on the different topics we talked about. And if you would be so inclined, you can always like or subscribe to our podcast. We have new content pretty much every Tuesday. You can do that wherever you get your podcasts. We're on Spotify, we're on Apple Music, etc., etc. And we'll be back next week with another conversation. Until then, Thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.